everybody. It's the end of another week, and we're getting ready for our next week in our weekly market analysis. And we also have a special report for you getting ready for Black Friday. This is for the week of November 16th to November 20th. Of course, I'm Michael DeGioia, Director of Institutional Sales here at Dash Trader, as well as an educator. And my co-host, Jill Malandrino, Global Markets Reporter from NASDAQ. Jill, how are you doing?
Good, doing well. Happy it's Friday. This is always my favorite hit of the week because I know it's time for the weekend.
Absolutely. It's ready for the weekend. And of course, we can still go out for the weekend, albeit I think we have to be home at 10 o'clock here in New York. And they're getting ready for the holidays as well. In the news, obviously, COVID-19 cases continue to increase worldwide. The question is, will we have more lockdowns in the future? What are your thoughts, Jill?
Oh, boy, it's so hard to tell. I think that this is going to be continued to be handled state by state. That was the strategy the first time around. It appears it's going to be the strategy the second time around. I'm not quite sure there is a federal strategy at this point. Even when we talk about vaccines becoming available, and because there has not been as much work done on the federal level, how are we going to determine how this is passed out, right? If we couldn't even get through mask strategies and containing it, how are they going to figure out what the deployment of the vaccines are going to be like? It is incredibly complicated, the logistics, the cooperation that goes into a massive movement like this is something that none of us can understand. It requires people in the federal government, the state governments, local governments, the pharmaceutical companies, logistical companies to get this deployed. So until that happens, I think we run that risk on the local and state level of facing lockdowns until this can be contained.
Yeah, I mean, obviously, there's not going to be any benefit from the vaccine until at least the first or second quarter of next year. If the vaccines do start to get distributed, it's going to go to first responders and elderly first. Obviously, that makes the most sense. So I think that the right now the strategy is to just kind of wait it out, right? I mean, that's and deal with whatever the states decide to do. My guess is that we will have another lockdown in New York City because New York City schools have already closed. We probably will have another lockdown in New York State, just because, obviously New York State has seemed to have had a very, very strong policy towards the coronavirus after the kind of initial craziness. But I guess, and it's not just in the United States, it's also worldwide as we see cases increasing in France, England, Italy, Spain, you name it. It seems like the coronavirus has made a comeback in a big way. But that brings me on to my next topic, right? I mean, we had all that stimulus from the Treasury, and it looks like there was about $400 or $500 billion that was not used, and that was sitting at the Fed, and the Treasury Secretary recalled those funds. What are your thoughts on what transpired this week with the Treasury Secretary recalling those funds? Will it have any effect on the Fed's capacity going forward?
Yeah, I'll get to that in a minute, but I just want to follow up on one thing that you said with future lockdowns. I wonder if the concern is going to be at some point if the healthcare system gets so stressed and they literally don't have any more beds or healthcare workers get sick and can't take care of people, if that would force some kind of lockdown. So that would be something interesting to watch as this moves on as well that we should keep in the back of our mind. But to be honest with you, I don't quite understand the move as much as I understand other machinations in the market. But by the way, stocks in the fixed income market digested the news, it was relatively orderly. It wasn't like a massive move to one way or the other. So perhaps the market is thinking that negotiations are still on the table, or they'll find a way to still be able to work together. I think it most likely impacts, what we're seeing in stimulus and what businesses and Main Street need to get through this winter. I think that's really where the biggest impact is going to be. And the market just kind of, because it is a discounting mechanism and looks 6 months forward, recognizes that there will be some kind of deal or the opportunity for a deal within that time. And I think that's why it was digested in a relatively orderly way.
Yep. To be totally honest with you, I mean, it seemed like it was just a kind of a housekeeping move, like the money's sitting there, it's not being used. But I think that the initial knee-jerk reaction was that this is them pulling the money back. The Fed still has a lot of bullets left in its gun. So that's the last question: is the Fed running out of bullets? The old expression is that, has the Fed used all of its remedies to kind of fix the markets? And I don't think the Fed has run out quite yet, but it certainly has kind of shown its hand. So we certainly have a little bit more leverage in the Fed, but certainly the Fed has kind of shown its hand as to what it plans to do going forward. And I think that that's part of the reason why we've seen such a run in digital assets and cryptocurrency, is that we know that we're going to have a kind of a printing press of sorts going forward through 2021, 2022. Whoever gets into the presidency is going to continue that kind of printing of dollars, printing of fiat currency. I mean, it is what it is. There doesn't seem to be any other way out of it.
Well, that's why we've seen a pretty fantastic run with cryptocurrency, anticipating that, what's happening with the dollar and thinking about inflation hedges and so forth. And of course, on the other side of that, we're seeing mass adoption, but I would imagine some of that comes into play as well.
Yeah, no, definitely mass adoption. I mean, it seems like everybody has warmed up to crypto quite considerably since in the last decade. Jumping right along here, I mean, the QQQ on the weekly chart looks like it's getting ready for another move to the upside. And I'm going to bring up the VIX shortly. So if you notice, we made a strong move up after the election. We've kind of made a pullback. That's called a 1-2-3 continuation play, where you make a strong green bar, then you get a red bar. Very often a 1-2-3 continuation play is actually a bullish pattern at the end of a mature uptrend. So a lot of times when it looks that beautiful and it has such a clean chart, you will get that move, but it might not be sustained, meaning we might make a move that fails. And that does kind of line up with a lot of the other charts that we're looking at and that I'm going to show you today. That same kind of pattern is kind of illustrated on the S&P, but a little bit less pronounced, meaning that the S&P made a strong move up, it gapped up, it's been pulling back for 2 weeks. But we will see if that move to the upside, how much strength is in that move to the upside. Certainly the red volume bars indicate that there's a lot of selling on the down weeks. So the down weeks have had a lot of selling. The up week there was one up week, and it was a very strong up week at that. But certainly the buying was just average on the up week, while we've had literally 5 down weeks of the last 6 weeks. Which is a little bit different than what we've seen during the majority of the run up. That's very, very indicative of a mature uptrend, meaning that we're still trending up. We're making new highs on price, but the volume is starting to show that people are exiting some of their positions. And look, it's the right time of year for it, right? We're going into the end of the year. If you had any losses in the beginning of the year, you could probably wash some gains. So there's definitely going to be a lot of wash sales this year, in my opinion. So a lot of tax selling as well going into the end of the year, and we see that as well on the DIA. So we've certainly seen that kind of action across all the major indices. Gold. Any thoughts on gold, Jill, as we go? Because gold has really underperformed lately. I mean, it outperformed early in the year, but now it's kind of underperforming.
Yeah, I think part of that can be exactly what you were saying before. I mean, there were some massive gains that were made earlier in the year. And again, when we talk about inflation hedges and so forth, I really think some of the wind has been taken out of the sails of traditional asset classes as people are looking at cryptocurrencies. Even on the institutional side, they're allocating for alternative investments. And perhaps, that could be part of it as well. But I do... I had the World Gold Council, their head of research, on my show a couple of weeks ago, and they're still pretty bullish on gold until the end of the year, just because there are a lot of scenarios with some uncertainty that's out there. So I wouldn't say that it's setting up for, a continuous, a big decline, but there is expectation that it could pick up some steam towards the end of the year, especially if things continue to get messy.
Yes, absolutely. Absolutely. I think that traditionally, let's just take a look at gold. Traditionally, gold has a move going into February anyway. Usually has to do with the Chinese New Year and, and some other purchasing from India. India has very, very big natural gold demand going into January and February. So for me, I'm still a gold bull going into, into the end of the year.
Yeah, they're what's called the consumer area of gold, which is jewelry purchasing. It's looking really strong in India as well. As seasonal shopping, they've rebounded from the losses that they saw through COVID-19 and with the shutdowns, because they were shut down 100% completely from March to May. They had some of the most severe restrictions. So you have a lot of that demand that's been pulled forward now, but they've seen a pretty remarkable recovery in there as well.
Yep. All right. So let's jump right ahead. We'll look at the VIX chart. So here was this is the volatility index from this is a financial product that measures volatility in the market. So some of the analysis that I've been looking at shows that volatility is kind of pulled back to its pre-pandemic support level. And when you notice, not only is it in its weekly pre-pandemic support level, but it also has kind of a range. That it's near the bottom of the range on the daily as well. So usually what happens is you'll get a washout or capitulation, meaning that volatility will snap back to the point at which it broke out of, and then it will snap back to the upside. So we'll get a strong move down on the VIX, and then it'll get a strong snap back to the top of that range. And that means at first we'll kind of revisit that support point, and then we will rally back up and potentially break this downtrend line on that snapback after it exceeds the bottom trend line. And that's just a very common pattern that would go along with the markets going up, rallying into the Christmas and holiday season, and then, of course, potentially selling off into January and February thereafter. Okay, the other thing that I wanted to show here was on the VIX, the VXX. We also have the price of puts getting very, very expensive as you go out from February into March. Okay, so you can see that this is the put pricing going out into February and March. So you got January, February, and March. You can see that the cost of things, the VIX is potentially going up steeply, and I think that also indicates that prices on stocks, valuations and prices on stocks are very, very high, and that probably will be ripe for some kind of a pullback going into January and February, potentially even March. And the reason for that is that we've made a tremendous run. The trend is mature. Well, we're rallying into Christmas season, which is traditionally very, very bullish. All right, so let's take a first look at the holiday season. Some of the winners that we told you that we would look at is now Apple. Probably the chart looks great. We're going to look at the chart in a few seconds. It's a beneficiary twofold, right? If Biden is in fact the president, then certainly Apple will benefit from a relaxation of the China trade wars. It certainly looks like it's already benefiting from that somewhat. Also, I think that the iPhone 12 is going to be a big success story. So Apple certainly looks like it has some potential upside. Microsoft has Xbox as well as Surface Book sales going into the Christmas season. Anybody who didn't already buy themselves a new laptop might be in the market for one. Certainly Microsoft, seems to be the master of the cloud computing. I mean, that Microsoft seems to have been the big winner of the cloud computing wars. I would love to hear your thoughts on those two.
Yeah, well, it's interesting. Of those two, the first, Apple and Microsoft, we just had, Mike just got his iPhone 12 delivered to the house. My stepson tried to order the Xbox yesterday, it sold out instantly. So, I mean, anecdotally, these are certainly the winners here. The demand for Xbox is just unbelievable. But, Yep, they are in the right spot when it comes to consumers, certainly cloud computing, and I still think that we're in the very early stages, early innings of what's capable with the cloud. So that's certainly not a trend that's going away anytime soon. But Microsoft's firing on all cylinders there. In fact, we had one of our index folks on talking about NASDAQ 100 after I had you on the show this afternoon. And instead of FANG now, everyone's referring it to FANG, right? So Microsoft has replaced the Netflix of it. But, it's all of those key names that are driving the new economy. And I don't think they're going away regardless of the old economy versus, work from home, work from anywhere trade.
Yep, absolutely. So the other three that we have here is Amazon, Walmart, and Target. Okay. The reason Amazon's on there is obviously Amazon seems to be the way that everybody does their shopping these days. I mean, the Amazon is in everything. And it looks like Amazon, which has already made a tremendous run up, might have a little bit more of a run in it. And we're going to look at the chart. Even though right now it's just consolidating, it certainly looks like it might have a run. Walmart and Target seem to be the only two stores that always stay open no matter what the lockdown situation is. My personal opinion is that people are going to want to shop in person because they've been kind of deprived of shopping in person going into the Christmas season. They also have great online presence. I think people are kind of been a little bit deprived of the in-store shopping experience. And the only two stores that I know are always open are Walmart and Target. At least everywhere I go, they always seem to be open. And then, of course, finally, we have Bitcoin and Ethereum, GBTC and ETHE are both tracking coins for Bitcoin and Ethereum. And it seems like they have been the big DeFi digital asset winners, and they have been outperforming gold. Although, like we said earlier, gold might be ready for a little bit of a move on the upswing. The blast off in digital assets has been phenomenal. This is Bitcoin's chart on the weekly, complete breakout. Even surpassed its prior high on GBTC. On Bitcoin, the underlying, it's basically just revisiting its prior highs. I personally look at this chart as one that's ripe for some kind of a pullback. If I had bought Bitcoin when it was 20,000 or 18,000 or 19,000, I'd certainly be in the mood to sell it after 2.5, 3 years. So I think that's a good area of natural resistance. And a good reason for a pullback on Bitcoin. As far as Ethereum goes, Ethereum, we've been mentioning it for the last few weeks, and certainly Ethereum has done great over the last few weeks. I think Ethereum has a tremendous amount of room to the upside because obviously DeFi, it is a disruptive technology. The banks have a lot to worry about here, although they are still investing in it. So even though the banks have a lot to worry about it, they all seem to be pouring into it as well, which tells me that it's probably going to be around for a while. Microsoft is here on the weekly chart. Microsoft looks great. Although this is a little bit of a slappy slide consolidation, it seems to me like Microsoft has really, really made a comeback. This was kind of a boring, slow stock for a long period of time, but certainly Microsoft seems to be very competitive these days. Apple's chart is also looking good. You got a low and then a higher low. You got a possible breakout on Apple. Okay. And to me, this looks like a great, anytime you have a chart like this where the midpoint potentially could go higher, if it breaks that midpoint, it's going to revisit the prior highs. It seems like it's digested its stock split. And now with the iPhone 12, it looks like we might have some, more bright days ahead of us. As far as Tesla, now I didn't mention Tesla on the list, but obviously Tesla, as you and I had mentioned, was close to being added to the S&P. Well, it finally got added. So now Tesla is part of the S&P 100. And, if the question is whether or not it will break and hold those highs as we go forward. So will Tesla break and hold the highs, as the last few weeks and months of the year continue? Personally, I think that Tesla's got a bright future ahead of it because it's been added to the S&P. Institutions have to hold it now. So I'd like to hear your thoughts on that.
It's interesting. I had this conversation today again with our index team, And, you know, that's so with the NASDAQ 100 as an example, and of course it's still going to be within that index. It has a very methodical approach, right? Whereas the S&P 500 has a committee that selects what stocks go into the index. Now, look at how much of a return that they've missed out by not adding it in, let's say earlier in the year, right? That could be almost 400% return in some cases. Whereas the NASDAQ 100 takes a very methodical approach to it. So it's interesting, you know, it could bode well. I mean, imagine if they would have had the return of Tesla with what it's done in 2021, having been added to the index a bit earlier in the year. So they've lost out a little bit of the juice on that, but that's more of an indexing story. But look, EV is, and the related companies to it, the supply chain is certainly here to stay, right? It's every auto company is making a push into this. Hyundai just introduced, I see there's 7 or 10 new lines to it. Volkswagen is doing a fantastic job with their EV lineup, being directly a competitor to the Honda CR-V and the Toyota RAV4. You have the Hummer, the beast that came out, 100 was 1,000 horsepower electric vehicle, and of course that's not in everyone's price range, but you're seeing it across the board, whereas traditional auto companies outside of Tesla and the ultra luxury ones that have been focusing on EV, we're looking at electronic technology for better gas mileage, for better emission control. Now it's being produced on a mass scale just as electric vehicles. So it's not even a competitive story for Tesla. It's just the way that the auto industry is evolving. So when you think about EV outlook, when you think about alternative sources of energy with the new administration coming in, certainly that's going to bode well. But I'll tell you what, anything that is related to alternative renewables and so forth, battery technology, EV technology, that's your long-term spot.
Absolutely. Absolutely. It seems like self-driving cars is the way, and self-driving trucks certainly is the way of the future. It's going to put a lot of people out of jobs, unfortunately. But that the market don't care about that.
Well, you have to retrain the workforce, right?
Yep.
So
absolutely.
You don't need people to fix horse and buggies anymore. Now they fix electric vehicles. It's a matter of retraining the workforce, which America is in dire need of.
Yes, absolutely. But I think that there's like something like 3 million truck drivers in the United States. That's a lot of people to retrain. The Walmart is certainly looking good. Right. So Walmart looking good to the upside, making higher highs and higher lows. This is a potential breakout above the previous high. And Target. So both Target and Walmart are blasting off and really looking and showing relative strength to the rest of the markets as far as, I mean, you know, as far as retailers go, they're certainly looking like online retailers, even though they do have brick and mortar elements. Last but not least is Amazon, which looks like it has a nice consolidation. And look, that consolidation could break out either direction. But my opinion is going into the holiday season, it's gonna break out most likely to the upside. Usually a consolidation will break out in the direction of the prior move. All right, which brings me to my long-awaited options trading series, which will start to be released this coming weekend, going into the Thanksgiving weekend. I'm going to be covering the options levels as per the brokerage option rules. Level 1 options is covered calls and long protective puts. Intro to options is long calls and long puts, as well as credit and debit spreads, which is level 3. And then finally, level 4 is naked and uncovered writing. This is a great introductory course to options. I'm also available for mentoring. This is DAS's new program. DAS Trader is now offering mentoring. You can check that out at learningdaytrading.com. Scroll down to the trading and coaching and mentoring button. There's a big, beautiful button that says DAS Mentor. That's me. If you'd like to start working with me, I have a special promotion where you can do a half an hour Zoom session for a special price. I believe it's just $50. And certainly that'll give you a good start as to what we can do working together. I can help you amp up your trading with options, as well as just teach you about technical analysis and trading in general. Bringing us on to the next item, the winter competition is finally upon us. Registration for the winter expert trading competition opens this Sunday, this 11/22, and runs through 12/6. The competition begins on 12/7 and runs 10 trading days to 12.18. You can go to number one best trader, onebesttrader.com to learn more. Don't miss out for our early bird special. Sign up Saturday, 11/28, and get a $50 off for the number one best trader competition for the winter session. The price will go up to $150 on Sunday, 11/29. So you got a nice 1 week window to get that discounted price to be part of the competition. Visit onebesttrader.com for more information and to sign up. The winner's prizes the printer will get their name on their name in lights right in Times Square at the NASDAQ market site. There'll also be a guest on Jill's show. We always have a lot of fun when they come on to the show, right, Jill?
We always have a lot of fun. In fact, I'm going to make fun of you. A big, beautiful button.
Yep, you like my big, beautiful button? Yes, finally. Long waited. Awesome. Yeah. I want to get my face there on the NASDAQ market site one of these days. Needless to say, there'll be a guest on Jill's show, and they get a virtual luncheon and special guest from the trading world. And lunch will be provided by Dash Trader, of course. They will also get a 6-month access to the Dash Trader Pro platform. And that brings me to next week. So next week, we will not be having a market analysis because obviously the Thanksgiving holiday, there'll be a half day on that Friday, but we will be back on 12/4. Certainly sign up for our newsletter. You can do that at the Dash Trader website as well as the learningdaytrading.com website. You can get that newsletter that we send out each and every month. Subscribe to our YouTube channel. We have a lot of great content planned for you at the Dash Trader TV YouTube channel and Dash Trader Pro channels. You should certainly be following us on LinkedIn, Twitter, and Facebook and Instagram already. But if you aren't, please join us. We'd love to have you as a follower. And Jill, that pretty much wraps it up. I'm going to miss you next week.
I know.
That's what's going on.
I know. Here. This is awesome. This is like it's almost like a therapy session just to walk your head through what's going on in the markets. But Mike, as always, thanks for having me on. Have a happy Thanksgiving to you guys, Dash, all of our listeners, and excited. Get back on the horse December 4th.
We have a lot to be thankful for this year. So God bless everybody. Have a wonderful, wonderful Thanksgiving holiday. And thank you for joining us. See you all soon. Bye-bye now.